And today I just wanted to kind of discuss life insurance, kind of basing what you might need for life insurance or generational wealth or mortgage insurance or whichever it may be, whatever term we would like to use for it. But basically, how would you like to set yourself up and your family for the future if the worst did happen to you? Obviously, during the last year plus, we've had a lot of COVID, a lot of additional people pass away due to the COVID virus. And, that's definitely come across a lot of people's mind. Us here at the agency, we've had a couple people that have passed away that have been insured with us for years that passed away due to COVID. One fortunate for a few of the clients that we had, they all did have life insurance. So we did have a check very shortly after to help take care of their family and their loved ones on that. So a lot of people ask, well, how much life insurance do I need? And a lot of people are going to think of some big astronomical number, right? Typically, we want to figure 10 to 12 times annual income if we're replacing, basically most of the time we're replacing an income. So if you make $50,000 a year, roughly you should have $500,000 to $600,000 worth of life insurance. Now, $500,000 to $600,000, a lot of people are going to look at that price that comes with it and say, I can't afford that kind of life insurance. Well, no problem. You don't have to get $500,000 to $600,000 if you make that $50,000 a year. Maybe we look at something where we could set our family up financially to pay some of the house off, or to make payments for quite a few years, or to make payments for some time, so that way the family can get readjusted and possibly move. Maybe it's just to pay an education bill. Maybe we're in a great financial situation and all it is retirement for our spouse. Maybe that's the situation. Whichever it is, the old and new theory is some life insurance is better than none. Okay, so when we're sitting there kind of going through exactly what and how much we need, so for example, if the $500,000, for example, costed $200 a month for a term insurance policy, we can't do $200 a month. Okay, so what can we do? Can we do $50 a month, $100 a month, $75 a month, whatever it may be, and we can tailor a lot of different solutions for you. The other thing is too, maybe we're only 40 years old and we need we want it to last basically our whole life. Well, a lot of that time it's not going to, we're going to live past 70 years old if we did a 30-year term. So maybe we look at having multiple policies, but keeping within the same budget range. For example, some sort of either a whole policy or what they would call an index universal life policy that builds cash value as well, and then also that payment will remain the same your entire life, and then also term to offset that. So for example, if our budget was $200 a month and we could get you $150 of it in permanent whole or index universal life insurance, and then supplement that with the other $50 a month to give you a bigger number for term, then we can do that. You also have to remember, typically life insurance is designed as when you get older, you're going to be more financially independent or more financially resolvent, where you don't need that bigger payout. Typically, if I'm carrying $1 million or plus, or $500,000 even plus, I'm probably a little bit younger because I haven't had the years to accumulate enough assets and money in order to put that away for my family. So therefore, it's a big number in the death benefit in case the worst happened for your family. So even if you don't have a family though, let's look at this realistically. Let's say you don't own a house, but you own a car. I'm sure you have some sort of family, either a mother, father, brother, sister. Somebody's going to have to either bury you, cremate you, or whatever it may be, and there is a cost involved with that. So wouldn't you like to at least leave enough money for them in order to do that, in order to take care of your things at the end of your life? That's the other thing too. I do hear from some people like, oh, I don't need that, or I don't want that, or I don't have anybody to leave anything to. So for example, let's say you have a sibling, you passed away, somebody's going to have to take care of it, right? So you don't want to leave it upon the county or the state to do what they're going to do, because God knows what could happen. So therefore, you're going to want to leave enough money for those people in order to at least bury you, or maybe even, they take care of your endings, and in return, they get a week-long vacation after the fact because they took care of your things afterwards. So there is not really a scenario where the life insurance is not somewhat needed. Now, let's say a lot of people have as well say, I'm financially fine, we're leaving money for the grandkids, we don't need life insurance. Well, let me ask you this. If you were 70 years old and you had $100,000, let's say, for the grandkids, and if I could put that into a permanent policy, it's a one-time payment of that $100,000, and that $100,000 automatically turned into $145,000, would you be interested? Because all you're going to do is leave more money for the grandkids. It's that money that was set aside anyway, so why not use that to increase what the grandkids will get? Now, also, in that same type of policy like that, where it's a one-time payment, there's also no fees in that policy. You can withdraw the money at any time if you, for some reason, need all the money back, or you can just withdraw 25% of it every year, up to 4 years if need be, until the policy was solvent, where there was no policy left, or there was just enough money left there to pay out the kids. So, for example, that $100,000 that I talked about, you could take $25,000 out of that if you needed the money for absolutely something, let's say next year. And you'd still have that $75,000 that you put in, and it would still pay in 75% of the death benefit as before. So that, 75 is now worth maybe right around 100, or maybe a little bit more. But that basically give you a good idea on that. So at any type of situation, there's some sort of need for life insurance. I know it's something that not everybody wants to talk about, and a lot of times we don't say the word life insurance just because it gets people to think about death. It's not really about death. It's really about setting up the people behind you or in generational type wealth, to set them up, or generational type just to get along. You don't have to call it wealth. Maybe we're not trying to make our spouse or our kids or our grandkids, we're not trying to make them wealthy, but we would like to set them up for success, so to speak, and to make sure that they're not living hand to mouth or paycheck to paycheck. So whatever type of life insurance you might be interested in, or even if you don't know which kind you want to be interested in, but you are interested in the fact of taking care of loved ones or somebody to bury you or cremate you, then it's not a problem. Please give us a call. Email us through scottjenkinsinsuranceagency.com on our website. Email us, text us, whatever is the easiest. We'll be more than happy to answer any of your questions. So once again, thank you for joining me on this episode of Doing Insurance Right. As always, if you could rate, review, or subscribe to whatever great platform you're listening to us on, whether it be Spotify, Chrome, Google, Apple, iHeartRadio, any of those great platforms out there, greatly appreciate it, and look forward to seeing you on the next episode.